General nervousness over the Greek situation continues to cast a bit of a pall over world markets. Just to recap, the deal is that the Greeks want to have forgiven about half of their debt mountain, as well as reduce interest rates. So at the end of the day, their interest bill for a year falls from roughly 10 billion to 4 billion. On top of that, the EU finance ministers won't allow another bailout of Greece until they've got that deal signed, sealed and delivered. So what were the impacts on world markets over the last day or two? Well, the Dow was off roughly 40 points. Looking at European markets, most of those are off nearly 1%. In fact, one of the only bright rays was the NZX 50, which increased by 13 points yesterday. On currency markets, the Kiwi was initially off against the US dollar, but recovered this morning to break back through the 82-cent barrier. The Kiwi was down against the yen as the yen strengthens against most currencies, was relatively flat against the Aussie and slightly up against the euro. Last week, New Zealand's trade balance figures for the month of December were released, and they showed some good news. Contrary to analysts' expectations, there was actually a surplus of exports over imports to the tune of $338 million. Most analysts thought there'd be a small deficit. So what actually drove these numbers? Well, the primary driver was the increase in exports of 6.8%, while imports remained relatively flat. And behind those export numbers was a good news story for dairy, which actually increased roughly 12% over that quarter. Looking at actually the whole year, that meant that dairy contributed more than $11 billion to the New Zealand economy. On the flip side though, was meat, which was down roughly 10%. And this was driven again by supply shortages, which have been brought on by the good weather and farmers looking to build up weights before taking to market.